I'm Danielle Hale, Chief Economist at Realtor.com. In this update, I'm going to discuss the latest jobs report and bring you up to speed on today's mortgage rates and how they compare to rates on outstanding mortgage debt, as well as March housing trends, weekly housing data, and share my thoughts on the latest tariff announcement. First, the March jobs report showed that companies continued to add jobs in March, with hiring ticking higher. The DOGE cuts were evident in this report, with the federal workforce shrinking for a second month. Meanwhile, the unemployment rate edged up again, and wage growth continued, but at a slower pace. Last week, I discussed growing consumer concerns in the consumer confidence data, with expectations about the next 6 months falling to a 12-year low. Despite consumer concerns, so far, signals from the labor market remain relatively healthy. Financial and equities markets, however, were rocked by the latest administration tariff announcement, which added new tariffs of varying amounts on just about all trading partners that will raise costs for American consumers. While this may not mean ongoing inflation, tariffs will certainly raise measured prices in the near term, making it harder for the Fed to parse incoming data and raising the risk of a policy mistake. Concerns about slower economic growth as businesses and consumers scramble to adjust to policy and uncertainty delays investment decisions drove equities lower and bond prices higher, pushing interest rates down. These developments were not yet tracked in this week's market mortgage rates, which dropped just 1 basis point, remaining within the fairly narrow 6.6 to 6.7% range they've occupied for 5 weeks now. This means that mortgage rates are likely to move lower in next week's update, and shoppers working with a lender are already likely seeing lower rates. Whether these lower rates will lead to an increase in housing activity remains to be seen. The Realtor.com March Housing Trends Report shows that sellers actively engage with the housing market, putting more homes up for sale this year compared to last. The data suggests that buyers were a bit more reserved, with pending home sales in many major markets trending lower, even as shoppers had more options to choose from and asking prices were flat. Weekly data show that these trends were fairly consistent throughout the month of March. The uptick in seller activity is notable because the gap between today's market rates and the rate many homeowners have on their current mortgage remains quite large. In fact, the latest data showed that 82% of homeowners with a mortgage had a rate under 6%. In a sign that the lock-in effect is easing, however, this is down from 87% 1 year ago, and it's expected to edge lower later this year. You can find all the details, including full reports and our housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates and Instagram for graphics.